Well, Lisa, this is not going to be news. Good news. Down at 1600 Pennsylvania Avenue, the CPI comes in up 1% for the month of May. That is higher than the 0.3 we saw in April and much higher than the 0.7 that had been forecast. Core comes in up 0.6%. That is the same as it was the prior month, but it is higher than what had been anticipated. On a year-over-year basis, when you're looking at where inflation is, we thought we could say it peaked last month. It did not. It was up 8.3% in April, 8.6% for the month of May. That matches the all-time high in this cycle. And the core rate up 6%. That's a little bit lower than last month's 6.2%. And that's kind of what we've been expecting, given the fact that the energy complex is driving so much of what's going on. And let's take a quick look at that. Gasoline up 4.1% in the month of May, and that was one of the things that had dropped in April on a year-over-year basis. Gasoline 48.7% higher than in May of 2021. Taking a look at food up 1.2%, and that keeps the year-over-year rate at 10.1%. Used cars and trucks, everybody's bogeyman since the pandemic began, were up on the month by 0.7, so they are up by 5% year over year, a little bit lower than it has been. But overall, we're seeing very, very strong gains. And Lisa, the number for shelter up 0.6%, 5.5% on the year. So all of the categories that have been pushing us higher are still doing so.
We're seeing some big moves in the markets, particularly on the front end of the yield curve, surging at one point very much clearly to the highest level, and even on an intraday basis going back to November 2018, close to 2.9%. We are seeing that sell-off accelerate on the equity market. This is all the kinds of downside surprise that you're going to want to see. It is now a new peak inflation. We had expected to see the peak inflation last month. It was not. In the month before, we saw an acceleration. That sell-off increasing. And Tom, right now, that NASDAQ getting absolutely slammed before we saw some gains, now down 1.4%, exceeding the declines that we saw in the S&P.
I just really want to state that this is an extraordinary report. This completely refutes any idea of ebbing inflation. It will take time to go into the markets. Dow down 300 points, well under 32,000. S&P not on its way to 2,900 and what we heard the other day, but under 4,000, down 43 points. Critically, the VIX 27.31, and you really wonder after yesterday's afternoon, folks, do we revisit a 30 VIX today? Michael McKee, you are massaging this data, but what I see here, Mike, that is so important is the linkage of core up with headline up. How big a surprise is that, Michael McKee?
Well, going into it, Tom, a lot of people had looked at the energy complex in particular and said we were going to get an upside surprise, and that was the lean on Wall Street. So the fact that we're seeing a big sell-off in futures is something of a surprise because people were kind of expecting this. The question is, how much can you divorce food and energy from the overall inflation picture? On an economic basis, we are expecting core to level off. We did see a big rise in the airfares of 18.6%. Or the month before, 12.6% this month. So that's still a problem area, but most people are going to focus on gasoline and food, and certainly down at the White House, that's what they're going to focus on.
All right, is it unfair, Mike, to ask if you had an ability to focus on the real estate components of inflation?
Yeah, I was just looking at owner's equivalent rent, and it was up during the month by 0.6%, and that is the highest in about 3 or 4 months. So we are seeing rent still work its way into the CPI, and it's a very big component, about a third of the CPI. It doesn't show up as much in the PCE, which the Fed follows, but you can bet that Fed officials who have to come up with a new forecast for next week are busy revising up at this point.
Everyone was talking about inventories, the buildups that we saw at Target and Walmart. Not that I necessarily need a T-shirt to live as much as I do a house, gas, and food, but are you seeing that come through in this report?
We are not seeing the same kind of changes, Matt, and because of the main fact that this report tends to emphasize some areas that the Fed does not. But we are seeing a little bit of discounting. I don't have the number right in front of me for the for apparel, but I can find that for you pretty quickly. But the big issue, of course, is what is it going to do for when you fill up a tank. And Tom, you know this, when you fill up a tank and it costs you $80 or $90, you're not going to go buy that T-shirt that Matt Miller wants.